Awesome. Perfect. Welcome to another simulation session. Ladies and gentlemen, we have around 33 attendees here today. What we're going to do is probably going to do either gold or pound yen. This is a simulator I use always, all the time. In this simulation, we're going to go over pre-New York and New York Open. We're going to be taking a look at the 4-hour bias, and then we're going to try to see if we can take trades based on the 30-minute or the 1 hour. Now, doing this simulation, sometimes if there's an opportunity to manage risk, if there's an opportunity to add positions, then we're going to do that as well. Can we do GJ? Oh, I guess we'll have to do a poll then. Let's start a poll. Can we start a poll over here? What's this? No, not this. Oh, can we? We can't start a poll. We're going to do a toss. Let's do that. We will do a toss. Okay, online toss. Yeah, we'll do a toss. Go. We've done this here before. So, all right. So, gold is tails and pound yen is heads. Okay? Pound yen is heads. Remember that. So we're going to flip it. Pound yen is heads. And oh, pound yen. All right. I guess we're going to do pound yen over here now. Okay, so let's see here. We're going to pick 20 dates. We're going to go all the way back towards 2021. Yeah, so September. Okay, we're going to go towards August 2022. So right here, 1st September. We only need Sundays. Okay, we got a bunch of dates over here. We got October, November, December, January, February, March, April, June. Oh, May is not there. Interesting. All right, let's do 6th February. Right? 6th February 2022. Okay, so we're going to start a new simulation here. Pound yen. We have February the 6th. There we go. We're going to start with 10,000 pounds because, we got our commissions check. We're balling, so we're going to test our luck with 10,000 pounds. We're going to take a look at 300 previous days here. Now we're going to load up the charts. Start with the weekly. We're going to go towards the daily. Go towards the 4-hour. Go towards the 1 hour. Edit. No. Okay, there we go. 30-minute. 15-minute maybe. Probably not going to be looking at a 15-minute a lot as would want to. So we're just going to kind of leave it there. Now slowly we're going to add these charts up over here. 1, 2, 3, 4, 5, 6. All right, perfect. We got the daily right here. We have the 4-hour right here. We got the 1 hour, 30 minutes, so on and so forth. Now, first of all, we're going to continue on towards the pre-New York, right? So if you look at the time right here, this says 0 hours. 0 hours is basically 5 p.m. Eastern time, right? This is 6 p.m., 7, 8, 9, 10, 11, 12, 1, 2, 3. This is London Open. And oh wow, look at that move right there. Just dropped. And this is okay. So this is 6 a.m. Eastern, right? So normally when we're coming up to the pre-New York session, sometimes you see that price has just moved down. We see price just moving down. We're thinking, oh my God, London session was amazing. We've missed the move. But whenever price moves down, this is a great opportunity for you to say, okay, you know what? Even if price moved down, maybe this is an opportunity where we could probably retrace, create resistance, and then continue pushing down, right? That's the sort of an outcome you should be looking at this point. Now, let's look at the higher time frames here, right? Now, daily candle, obviously, so let us bring up our toolbars here. So daily candle created a resistance, and we're pushing down, right? We were coming up, we came down now, so we don't know what's going on. We don't know whether daily candles are going to continue to push down or will it retrace. What's going to happen? We have no idea. Let's take a look on the 4-hour time frame. Now, looking at the 4-hour, the first thing we can see at that is prices are coming down. So whenever prices come down, you need to identify that how far can price potentially drop. So we have a support to the left hand side on the 4-hour, which is 155, 100. Before this drop down, we also had sort of like a consolidation area, which is where we had the support. And then we also created some sort of resistance and price came down. Now, obviously, we are creating some sort of a low. So we will want price to retrace, create resistance, and then continue to push down. Let's take a look on the 1-hour time frame. Looking at the 1-hour, we see that we are actually coming up to a support area here to the left-hand side. And we did break a consolidation area here as well, where we were consolidating for quite a while. So now we need to identify if price can continue moving. Now, was there news? Let's take a look over here. Past event, there was no, there was no news here at all. So this maybe would have been some sort of impulse moves or news or whatever there was. So we will trade just as we see price moving at this point. Right now, let's take a look at the 30-minute here. Now, 30-minute also came down, but when we look to the left-hand side, we're going to take a look at this wick. And now we will continue to the left-hand side, and what we will see is that, okay, probably this was some sort of a rejection area, right? Also, because of this, there was also a support area which we broke, and we continued to push down. Now we need some sort of, some sort of a retracement for price to move up, create resistance, and then continue to push down. And that's what basically we're gonna, probably focus on right here. So let's wait and see what happens, and then we can figure out where price can go after that, right? Or, since there was no news at this point. Now, here's one thing about news, right? Whenever there is some news that happens in the market, you see that here in the Forex Factory, whatever, in a news event, price moves down. Whenever there's no news, what I've seen here in the past is, now this was from this support 155 640, this was like a 50 pip move down. So whenever there's no news, right, there's always a probability that this move down may get corrected, right? And if we think that price is going to get corrected, we need some sort of now, we're not going to just buy right here to anticipate price to move up. We're going to do is we're going to wait for some sort of a market structure to form. And I think a really good market structure forming would be some sort of a, whether price moves up, creates resistance. Once we create resistance, if we break it, then there's a probability for price to move up, right? If we respect that resistance wherever it's formed, then there's a higher probability for price to continue pushing down, to retest this low, and potentially to continue pushing further down more, right? So that's basically the anticipation at this point. So we're going to wait and see how candles form here, especially on the 30-minute time frame, and then we're going to try to see if we can kind of get some sort of a trade opportunity there or not. So right now we're just waiting for the 30-minute candle to close. That's all what we're waiting for. Waiting for the candle to close and see if we can get some sort of an outcome here. Just patiently waiting. We have the 15-minute candle closing. Now we have the 30-minute candle closing here in about 10 simulation minutes. And yeah, let's just wait and see. It's all about waiting. The more you wait, the better you're going to get. So we got 4 minutes left, 3 minutes left. You can see we're pushing up. This is where the 30-minute candle has closed. We have closed bullish. Now, normally someone would say, okay, you know what? Let's buy because the candle has closed bullish. We have, the low right here, and then we got all this range for price to move up. But the problem is, one candle closing bullish does not mean that there's going to be a correction, right? It's better to wait for some sort of a resistance to form, and even if this candle breaks the high and continues to push up, that's even better, because then there's a bigger range for a sell. So never think if it's breaking the high, you're going to miss the trade. Don't worry about that, because if it goes up, we're going to create resistance and we can go down. Now, it's making that lower wick over here, which is, let's just wait, because we've had a pretty big move down over here. So candle's about to close over here now. And see, now it's breaking the high over here, right? If it's breaking the high in the last 5 minutes, it's not a good trade because it's about to close, and it's better to just wait 5 minutes to see how it's going to close. Even if it goes up in the last 5 minutes, that's totally fine. We're about to close, and there we go. We closed right here. Now, let's take a look on the 1 hour time frame. 1 hour candle closed bullish, right? Looking at the 4 hour, we're kind of like rejecting this area. And looking at the 30-minute, we've created a resistance over here. Now, if the 30-minute candle is creating a resistance, then there's a higher probability for price to move down on the 30-minute candle. But we have to measure the range. Now, even if someone takes a sell right here with the candle opened, this is a 16 pip range. Is this enough range to take a sell? Probably not, because it's a very, very small range. Plus, you got to identify the spread over here as well. So this is a very, very small range to take a sell. Even if you take a sell right here, having stops above the previous candle, the range is still like 19, 20. It's not enough range. But if this candle breaks the high of the 30-minute candle, I would say there's enough range for price to retrace. It's like a like a 30 pip range right over here. So in terms of corrections, I think that would be a very good idea to probably focus on that. If we can get a correction up till 155 640, and even looking at the 1 hour time frame, I think that could be a very good idea for price to continue to push up. The stops are going to be below the previous 30-minute candle. No, the stops are going to be below the candle that breaks this high. That's where the stops are going to go. Right? So once we break the high right here, this is where the impulse entry is going to go in. It's going to be a percentage. Let's do like 1%. We're going to go with visual mode, and let's execute a buy over here. Stops are going to go below this candle, and we're looking at price to probably continue till 155, probably up to this previous area of basically support we had. Oh, wow, okay. Looks like we took a really good entry at a wick fill. A sell would have been pretty great at that point, but yeah, let's just wait how the 15-minute candle closes. 15-minute candle has closed. Let's see if we can manage risk. So 15-minute candle has also closed bullish, which is very good. If the 15-minute candle closed a weak bullish candle, or if it closed below this minor resistance on the 15-minute, then it would have closed 50%. But if it closed a very strong bullish candle, which means that now the overall 30-minute candle can also close a very bullish 30-minute candle. Like, there's a high probability that it could do that. So let's wait to see how it's going to close over here in about 5 minutes, 4 minutes. Simulation time. And 3, 2, 1. There we go. 30-minute candle has closed bullish. We've also closed above this minor resistance, right? Which now makes sense for us to stay in this buy for price to continue to push up. There's a high probability now. Looking at the 1 hour time frame, 1 hour candle is also bullish here. So this makes perfect sense for price to probably continue to push bullish. And as we can see right here, we are pushing up with about 2 pips, 3 pips. Probably there's a rejection zone right here, but looking at the 1 hour time frame, it's clean candles here to the left hand side, so we gotta trust the 1 hour time frames. The 30-minute candle is about to close. It's coming down over here. We'll have to manage risk once it closes bearish. Okay. We closed a strong bullish candle, right? Looking at the 1 hour candle, 1 hour candle is also a very strong bullish candle, which means that, it's also NY open. So there's a very good probability for price to continue to push up. Now, one thing that we're going to do different here is that we're going to move our stops. Oh, put it at break even. No, not a break even. We got to bring it below this current 30-minute candle. Because if we think price is going to continue to push up, and it should respect this low. It should continue making higher highs and higher lows, which we are creating at this point, are higher highs and higher lows. So since we keep on doing that, there's a pretty good probability for price to continue to push up. And that's what we will focus on. Now, if we get a candle closing bearish, even on a 15-minute, that's where, okay, so there we go. 15-minute candle has closed. We close bearish, right? So we're going to close 50% right here. Closing 50% because we have to manage risk, correct? So we're going to leave the rest open. If the rest goes on towards profits, amazing. If it comes back down, then we close another 50%, manage risk, and call it a day. All right, so far so good. Managing trades, letting candles close, no problem. 30-minute candle has closed a weak bullish candle, but this doji is also making a higher low, which means there's still some probability for price to move up. So let's take a look on the 1 hour time frame. 1 hour candle is still where it's at this point. Looking at the 30-minute, now we have to decide a few things, right? So now we have to make sure we get certain things right. If this 30-minute candle breaks the low of the previous 30-minute candle, we're going to close another 50%. But if this 30-minute candle breaks the high of this previous 30-minute candle, which is also going to be the 1 hour candle breaking its own high, then there's a higher probability we could continue to push up. Right? So we got two scenarios. One, we break the low, we close 50%. Two, once we break the high, we can add our position back and we can leave it running and expect, the volume in New York session to continue pushing price up. So that's what I guess we could look at. Yeah, we're coming down over here. Oh, we haven't really gone below that area. See, we're breaking the high over here now. This is the perfect opportunity to add that position back. Can we add it back? Yes, that's what I repeated it 4 times. So this is the point to add the position back. Stops are going to go below this current candle and take profit, probably going to be the same area right there. Looking at the trade right here, I guess we can modify the stop here as well below this candle right here, and that's it. Let the volume from New York session continue price. So we are pushing up nicely. Our first position is up 13 pips right here. So we're probably going to close this one and leave the other one running to see if we do continue up to 155.600. Pushing up nicely at this point. Oh, wow. Almost we got to that point. I think this is going to be enough right here because we're coming up to a rejection area. So we don't know whether price will reject all the way up over here or we're going to reject right over here. So going to close everything right here since this is a very strong rejection area and just basically call it a trade right there. Oh, wow, look at that. Candle closed with no wick. So what happens whenever candles close with no wick? Whenever candles close with no wick, there's a 50-50 chance that price will either go up or it's going to go down. So we broke down this whole trade as the candles were forming when it came to managing risk, when it came to adding positions. We also talked about how if price goes the opposite way, will we close position? Or if price breaks the high, will we add a position? Right, so we looked at the strategy in both perspectives. Now, let's move on to the next day here, and let's have price action. Oh, wow, we just ranged over here for the most part. Okay. All right, this is the next day over here. This is London Open, 3, 4, 5, 6. 6 a.m. Eastern. We are back at 6 a.m. Eastern on the next day. The daily candle has basically rejected. We're probably coming up towards a resistance right here on the daily, right here. There's a high probability for this daily candle to continue to push up here as well. Looking at the 4 hour. 4 hour is also coming up to a rejection sort of area here to the left hand side. And we don't know So this is basically a 30 pip range here in the 4 hour. For the 4 hour to go up, we need to consult the small time frames, because on the small time frames, if we do create some sort of a support, if we do create some sort of like of a consolidation, then we could expect price to continue to push up or push down. But now looking at the smaller time frames, it looks pretty difficult because of the way the candles are forming. So first of all, on the 1 hour, we have a resistance forming here, right? We also have a support forming here on the 1 hour time frame. Let's clone this onto the 30-minute. And if you look at the 30-minute, we have a perfect scenario of consolidation on the 30-minute time frame. Now let's extend it to the left-hand side, and let's take a look at, if we do break up, how far can we go? So now looking at the 1 hour, let's zoom out here a little bit. Let's do scale fixed so we can take a look at the chart on the top side. If we do break up, obviously we have an area at, this price is 156,773, which is 40 pips away from the current resistance, right? 40 pips away. But the other problem is we have consolidation to the left hand side. So if we do break above this area 156,370, even though we have consolidation to the left hand side, the volume in the session, which is going to be NY Open, should continue pushing price up. The volume from pre-New York Open should continue pushing price up from this consolidation all the way to the next range at 156,750, right? If in case we break below support, right here, below these wicks actually 156 even, then there's a very good probability we can continue pushing down towards 155,750, which is a 25 pip range. And that's going to be a correction from yesterday's trade. I don't know. Was it yesterday? I don't know. But that's possibly going to be the move that we could look for. So we have a potential buy up. We have a potential sell down. All we got to do at this point is to wait for price to either break up or to break down. That's what we're waiting for. Yes, that is from the previous day. Thank you. Thank you, PK. So yeah. Right now, we're just going to wait, and we shall see how price forms and how we move through this area here. Maybe it's going to be consolidation. Maybe we're going to have a move up, move down. We don't know. So the 30-minute candle is closing. 30-minute candle has closed bullish. If you look at the bodies over here, this is a strong body. Now we have a weaker body. If we have a weaker body right here, this probably means that the volume going up is kind of like dying at that point. So we're going to wait to see, how price forms in this area. The 30-minute candle is, oh, wow, we're moving up over here. Okay. 15-minute candle has closed. Oh, 15-minute candle has closed with the wick on the top. So we can't take a buy over here, because the 30-minute candle is still open, and this entire area right up to this wick is a rejection area. So as the candle comes up, price may reject from this area. If we do close above 156,370, then there's a high probability to take a buy. But since this is a rejection area, we don't know whether it's going to reject or it's going to close into this area, so we got to wait. Oh, look at that. This is why you wait. Because of that rejection right there. So now we've closed with a rejection. New traders will look at this and say, oh, this is a perfect opportunity to take a sell, but you're basically selling into support, which is maybe like 13 pips away. So it's not enough range. I mean, it's a great sell over here, great selling opportunity, but the range is just not there. It's like a 16, 17 pip range. I mean, what are you going to do? We have NY Open in about an hour over here, so it's probably better to wait for NY Open, I'd say, I mean, yeah, it's just better to wait for NY Open. So let's wait and see what happens here. 30-minute candle has closed. You can see it closed a week. Bearish candle. Yes, trading within the range is also very, very risky. So we strictly have to wait for price to break above or break below. That's all what we're waiting for. And this is the NY Open now, right? This is the NY open, so we're just waiting here now. If we break below, that's a great opportunity to take a sell. But if we're looking at the 30-minute time frame, this is what we have to break below from support, right? This is the support we have to break below for price to move down. So if you break below that area, I think this is going to be an amazing sell because we have clean candles to the left hand side, and that's it. That's all what we're waiting for. Oh, we're coming down. No, rejecting that area. Look at the daily over here. If this daily candle breaks the high right here, I think we're going to continue to push up. But so far, we're just rejecting. 4 hours also rejecting. Very tough range. This is a very tough day over here to trade. Extremely tough day here to trade. All right, it's time to move up. Let's speed things up here a little bit. Let's wait for the next candle to close over here, right? Let's do next bar. Next candle closing bullish, still in the range. Yeah, I was still stuck in this range over. So let's look on the 4 hour here. So 4 hour is rejecting here. Oh, do I see what some of you guys see here as well? What would happen if this next 4 hour candle breaks the high of the previous 4 hour candle? Oh, wick fill. Oh, okay. Now I'm talking about the way this 4 hour candle is formed, right? So experienced people here in the group, they would look at this opportunity and say that, okay, if this candle structure was on the 30-minute time frame, and if the next 30-minute candle breaks the high of this previous one, there's a very good opportunity for price to move up. Impulse buys, perfect. Elvin, exactly what I was looking for. Impulse buys here. So we would need some sort of a confirmation on this time frame here as well. We're going a little bit over time over here, but I really want to see that happening. So we're going to wait for that to see if that actually does happen. So looking on the 4 hour at the same time, we are probably, oh wow, look at that. We're breaking the high over there. Even though we're breaking the high on the 4 hour, we need confirmations on the 30-minute. Right? And that confirmation would be a candle closing above. So candle has closed above right here, but it's also into this rejection area. So we've got to be very, very, very careful in this rejection area. We have to wait because we could reject from this area on the 30-minute, even though the 4 hour looks good. Right? Even though the 4 hour looks good, we could still reject on the 30-minute, and then overall price can come down to create a lower wick on the 4 hour. So we got to be very, very careful. We're not out of the woods yet. It's better to wait for this candle to close. And while you're waiting for this candle to close, price may move up, and that's totally fine. That's totally okay. Candle is closing. There we go. Candle has closed. It's closed a weak bearish candle, but if you look closely, it's closing right at this area. So we're still going over time. I really want to see how this is going to play out, because I really want to see if the 4 hour will eventually continue to go up. Yep, it's respecting support. Just got to see how this 30-minute candle is going to close. Let's forward this here a little bit. Oh, nice. Okay. We've closed above this area. This is a very good opportunity for price to move up. So the trade is going to be easy here. No problem. 4 hour is eventually starting to go up now. We have that now, if we think 4 hour is going to go up, we have that confirmation on the 30-minute time frame. We created resistance, broke above this area, retested the support, created a strong bullish candle, indicating that bullish run. We have a wick fill here, and then above this wick fill, we have nice range up till 156,760, which is 30 pips away. So I think this could be a very good idea to kind of take a trade over here. Visual mode. We're over time right here, but still this basically makes perfect sense. Bad time, no volume. No, this still has a lot of volume because this is London close. This shows me that you haven't went through the unlearn and relearn section on a database where we talk about times of volume. This is London close volume right here. Almost. because London close happens in an hour, and this is still when we have volume. Look at this, 10:30. London closes at 11 a.m. Eastern time. So we still have volume. Probably going to take that at like, 10, 15. Once we break this high, then so you're going to see, like, if this is London volume, there should be volume at this time. Oh wow, look at that. 17, 19, just close this right here and see where this candle goes. Forward this. Oh wow, it's time to trickle up and come down, right? So that's London close volume, right? There's NYSE volume, and then there's London close volume that happens. So this was basically, if you only traded the NY Open, New York session, this was like a no trade day. But you stuck around, you waited for price to, break above this area. You look on the 4-hour, it did exactly what we had hoped for. We waited for price to close above. This candle broke above, but we still wanted to wait a little bit. We waited. Then we had the perfect confirmation to take a buy. We looked at the 4-hour bias, and then we looked for confirmations on the 30-minute time frame and executed on it. And that came at time of volume, which was London close, right? So if you look at price now, we consolidated we consolidated from Asian session, we consolidated pre-London, consolidated London Open, consolidated pre-New York, consolidated NY Open, we had some volume at NYSE, but we just broke out of this range at NYSE. And the next bracket of volume is at London close, and that's where we had this move up at London close, right? So basically it was a consolidation, but we still, managed to find something at London close. Now, let's move on towards the next day here and see what's going on here on the next day. This is London Open, and this is pre-New York. Let's take a look on the daily. Daily is still starting to move up over here, okay, but we're coming up towards a strong rejection open. Please open sessions pop-up window. At the Sham, I don't like to open that sessions pop-up window because I know it from heart what the times are. See, this is pre-New York, 2 hours before New York Open. 1500 hours is New York Open, and this is basically here around London close. So I basically memorized this. So yeah, it just creates a lot of clutter on my chart, and I like to have my charts clean. All right, looking at the 4-hour now, we have to identify the bias. The bias here is bullish, obviously, because the 4 hours are moving up, right? Bullish. But we're also coming up towards some sort of a rejection area on the 4-hour because we can see in the past if you look at the date at the bottom, at January 18th, we rejected this area on the 4-hour and we continue to push down. And the 4-hour is coming up over here. So let's clone this over to the small time frames. Now looking at the 1-hour. Wow, we are coming up to some sort of a rejection area on the 1-hour here as well. Let's view chart toolbars. Yeah, this is a very strong rejection here on the left-hand side. So we'll have to be very, very careful here to see if we do take a buy. Yeah, we'll have to wait. Let's take a look on the 30-minute. Looking at the 30-minute, we're also coming up to the same area. Basically, we broke above this resistance on the 30-minute, and yeah, I think it's going to be very, very tough to see whether we can take a buy or a sell, or yeah, we'll have to see. If we really want to take a sell, I think a pretty good indication for a sell would be for price to create support, break that support, and then take a sell. 1500 NY Open, keep this in mind because that's similar to NY Open, simulation open. Yeah, that's true. So yeah, I mean, we're breaking the low right here, awesome, but we need to create support and then price to break that support, and then we can take a sell. Otherwise, there's no sell. So make a note of this. Whenever you have an uptrend, in an uptrend, okay, perfect. So we're creating a resistance here now. Let's zoom out a little bit. Let's remove this. Zoom in. We're creating a successful resistance. So whenever you have an uptrend, right? Whenever you have an uptrend, you have to wait. And if you want to take a sell, you have to wait for price to create a support. If you break the support, then there's an opportunity for sell. I don't know what fake out you're looking at. It's not a fake out. Perfect. So we've created a support now. If we break the support, then there's a very good opportunity for price to fill this wick and to continue on pushing down with volume, right? Even though if we break the support, right? If we break below the support, there's consolidation to the left-hand side. The only way price is going to move through consolidation is going to be through a lot of volume, right? And that volume is going to come through NY Open, and this is what we're looking at right now. NY Open. Well, pre-NY now, so yeah, so this is basically a consolidation area now. This is a range. It's like a 13, 12 pip range over here. So you just gotta have to wait. 30-minute candles are just consolidating. All we need is one candle to close below the support, take a sell, and have a nice day. But I guess we're just consolidating. Looking at the 4-hour time frame, you can see the same thing is happening on a 4-hour, 1 hour, still consolidating. Yeah, it's very tough. Let's clone this over to the 1 hour here. Oh, 1 hour. Yeah, still consolidating here on a 1 hour. 15-minute also consolidating. So yeah. Oh, there we go. See, we're breaking below. But a break below is not enough. We need a close below. We need a candle to actually close below this area to even consider a sell at this point, because this wick came down, was also a bearish candle, but we rejected. And if this candle comes down in this area, there's an opportunity it can reject. So that's what we're looking for. We're looking to see if we're going to reject or we're going to stay below. Looks like we rejected this area. Trading is easy. Just have to wait. Just have to wait for a candle to close. You have to wait for a candle to close in a way that you can identify easily that this is a trade. Oh, now look, we're breaking above. We need a candle to break. We need a candle to break and close above, basically. That's all what we're waiting for. Candle has closed. We've closed back in the range. And this is the start of the new 4-hour candle here as well. And if you look on the 4-hour candle closed bullish. Right? Very bullish. And if we want this new 4-hour candle to go up, which it does seem like, because if you look at the candle section in unlearn and relearn section, you will see that if a candle closes bullish with no wick at the bottom, this means that there's a high probability price is going to move up on the next candle, because the previous candle with no wick at the bottom, this also means that there was so much bullish volume that it didn't even make a lower wick. Right? So if we take that into account and say that, okay, now this new candle should go up, we need confirmations of that bullish move on the smaller time frames. What would that mean on 30-minute? We need a 30-minute candle to break above this consolidation to justify that 4-hour buying bias. That's what we need on the 30-minute. And if until we don't get that, there are no buys coming. Yeah, we need to break and close above. Or a break and close below. Look at that. Oh, wow. Look at that 30-minute candle moving over here. Looks like this is NYSE open, and NYSE also has a lot of volume, right? And now this candle has closed below this consolidation. If this candle has closed below this consolidation, and now there's volume in the market, NYSE, what's the probability of price moving down? Simple, right? We consolidated, we closed below consolidation. We talked about this now. With consolidation, there's a high probability for price to move down. But even if we now, take a sell once we break below the low, this is going to be a 19 pip move. Let's take a look on the 15-minute here. 15-minute, oh wow, look at this 15-minute. This 15-minute candle closed this wick is bigger than the body, so it's sort of like a borderline exhaustion to move down. So probably, if we can get some sort of, I think, yeah, see, we're breaking the low right here. I don't think this is enough confirmations. I think it's a little bit risky here. Yeah, I would say this is risky to take a sell. I'm waiting for the 15-minute candle to close, and this is how the 15-minute candle closed over here. Very tricky. Very tricky. Oh, wow. Yeah, very tricky. Trickster. Yeah, this is very, very, very tricky. I mean, now we break the low. I mean, short can go down, but yeah, looking at the small time frame, this was extremely, extremely tricky. No trade. Look at this 15-minute candle also rejecting. Coming up, pushing down. Yeah, this is very tricky. I would have said this as a very, very tricky trade. Too much noise to the left. I guess, well, there's too much noise to the left. I guess that's why price is kind of like, haphazardly moving up, moving down, but still eventually, let's take a look on the next 30-minute candle, but still eventually starting to move down over here, and now we're rejecting that area and whatever. Yeah, it was a very, very tricky sell over here. Let's move on to the next day over here now. Very tricky. Pound yen was tricky, man. Consolidated, waited, price moved down. But our idea was correct, right? If you still think about it, the bias was still correct. We didn't break up. Let's take a look on the 4-hour. 4-hour indeed rejected that area here as well. So let's move on to the next one. 3, 4, 5, 6. 6 a.m. Wow. 6 a.m. Eastern. Came with the rocket ship going all the way up. Looking at the daily has moved up. Daily seems like there's a probability we could be continuing to move up. Let's see if we have any news over it. So we have CPI news for USD. I don't think it's going to affect pound yen, but we'll see. Looking on the 4-hour, 4-hour is also moving up. Looking at the 1-hour, 1-hour is also moving up at this point. Looking at the 30-minute, 30-minute has also continued to move, create some sort of rejection. I guess this is a rejection on the 30-minute, and this is a resistance on the 30-minute. So yeah, I would say if we're going to continue to move up, what's the range right here? It's like a 60 pip range for daily candles to move up. Looking at the 4-hour, for sure, I think we have sort of like the same range if you look to the left-hand side. If we break the high of the previous 4-hour candle, the next resistance is 20 pips away. And then overall, this is like 40 pips away at 157. Okay. 30-minute, 15-minute. So we're going to focus on the 30-minute. And I guess if the bias is bullish, we need some sort of a support formed. And once that support forms, then we can anticipate price to move up. But if a support forms and we break that support, then we can identify price to move down. So see, this candle is formed. We need a bullish candle formed over here. Yeah, we need a bullish candle to be formed for price to move up. Even though we're breaking the low right here, it's not going to be a good sell because we need a support formed, and break of that support would be a great sell for price to, correct this move down. That's what we are looking for over here. There we go. Candle has closed bullish. Is this a great sell here, anticipating volume to go up? Probably not, because it's consolidating. We have to wait for price to break above. Also, we have CPI over here. So if we look at the previous CPI, if you guys remember the CPI we had on Tuesday, pound yen just, wow, it was just intense the way pound yen moved. It was crazy. Let's take a look at the CPI over here. What are they expecting? Oh, they're expecting an increase over here slowly. Inflation coming in. Russia-Ukraine thing also happening at that point. So, oh yeah, we're just consolidating here now. 1-hour also. Yeah, we're just consolidating over here. Candle's about to close. 3, 2, 1. There we go. Oh wow, look at this. Look at this 30-minute over here. Now, if we didn't have CPI, The bias would be for price to break above the previous 1 hour or 30 minute and continue to push up. That's where the bias would be. But since we got CPI, I guess CPI, we'd mostly be looking at gold this day. Yes, that's correct. We'd mostly be looking at gold. But let's dabble with pound yen over here. Damn, look at that. We're moving up over here now. Wow. What's going to happen? Should we use buy stops and sell stops? Is that what we should use? Let's use, yeah, right? Let's use buy stops here. Let's use buy stops above this candle. Practice, right? Practice. It's always better to practice. So we're going to use a buy stop right here, stop loss. Probably going to remove the stop loss here because, you know, so I'm going to use a buy stop above this candle. TP, we don't need a TP. Sell stop, we don't need a sell stop. All right, there we go. We're going to remove the stop loss. Sell stop. The only reason I don't need a sell stop here, because even if the next candle breaks the low, there's the support right here. And even if it gets activated, the sell stop, the support's right there, which is like a 6 pips away, you know, that's where problems can occur. But if we break above this high, then basically we have free run on the daily to continue up. That's why I don't think sell stops are going to be worthwhile. So let's see over here now. Oh, CPI has come up. Price is moving down. Yeah, nothing. Oh, wow. Oh, damn. There's a rejection right there. Do we want to wait till the buy stop gets executed, or? Yeah, it's the news, so we're going to close it. Doesn't make any sense. I mean, if this was live market, I would have never had that buy stop still open. Wow, we went all the way down over 15 pips, and now it's time to move up over here. Oh, came back down. Yeah, good thing removed the buy stop. All right. 4-hour candle is about to close here as well. 30-minute candle is going to close here as well. So yeah, let's just wait to see how the 30-minute candle. May I ask, sir? I noticed that U.S. economic news also affects pound yen and why. Yeah, that's true, because whenever there's a change in the USD, that's going to have an apparent change in the yen as well. You know, so that's the reason why it affects the pound yen here a little bit. Because US affects yen and pound yen, you know, obviously that gets affected then a little bit. So let's see how this 30-minute candle closes. Oh, damn. We closed above this resistance, which is good. The news has already passed. The 4-hour is also moving up over here. The new 4-hour candle has formed. The daily is moving up over here as well. So technically, it should create some sort of, oh, okay, well, I was going to say it should create some sort of support and then continue to push up. And I guess this retracement means just that. So we have to wait for the candle to close. See, now the news has died down. All the excitement, all the volatility from news has died down. And now we're coming into regular price action. And if price action is regular, we should create some sort of a support on the 30-minute. Or even on the 15-minute. 15 minutes breaking up over here. 30 minutes still open. Yeah, I guess this is going to be a missed trade over here. The 15-minute candle is about to close in 3, 2, 1. 15-minute candle has closed at that point. And yeah, looks like price can continue to push up with volume from NYSE. 17 pip stop. Looking at the 4-hour, we have still like 20 pips to go. Looking at the 1-hour time frame, we are pushing up. We've had a huge liquidity grab over here. I'm not going to execute on this, but I think we can anticipate this. Sometimes it's better to just anticipate trades than to execute on them. So my anticipation would be maybe stops below here and then anticipate price to continue to push up. 30 minute. Oh, nice. We did eventually continue to move up over here. Okay. Great. Made sense. So the anticipation was right. Another day conserving capital. Yes. Another day conserving capital. But for the week so far, we are up 3.6%. Right? 3.6%. Whenever there's a risky trade, whenever there's something you think that, oh, should I enter? Should I not enter? It's better to just keep your capital safe and then just watch it play out. Because the more you see certain things play out, the more confident you get. And the more confident you get, and if that happens like the 6th or 7th time, then you look around, you're like, okay, you know what? I've seen this happen like 6-7 times. I'm probably going to execute on this now because I've seen it play out before. So now when we now look at it, we had a move up, we consolidated, and then we broke out of this range after this huge liquidity grab. So that's a liquidity grab, right? So now what this tells me is that if we broke out of this range after a huge liquidity grab, there's a high probability for the volume in that specific session to continue pushing price up if we don't close back in the range. So we didn't close back in the range. We had confirmations over here for price to move up. We did move up. The bias was up. So, it worked out pretty well. Oh, wow. And we corrected the whole move over here as well. Crazy. See? CPI. CPI impulse move up and then boom, correct the whole move. All right. Here we are, another pre-New York session. Let's remove all these analyses here. Let's take a look on the weekly. Weekly is still pushing up. We haven't really once looked at the weekly. It didn't really make any sense, to look at the weekly that early on. Let's take a look at news over here. So we have no news coming up, basically nothing happening here. Let's take a look on the daily. Daily is still pushing up, but the daily has rejected this area. So we don't know whether this new daily candle will reject or will it continue to push up. Let's take a look on the 4-hour. 4-hour here is interesting. And what's interesting about the 4-hour is that we are basically creating a support for a potential drive up to retest this high on the 4-hour. Makes sense? If we think that the 4-hour candle is going to continue pushing up, we need confirmations on the smaller time frame. Let's take a look on the 1-hour time frame because that's where we need confirmations. Right, so the 1-hour has created support. Let's take a look at this in more detail on the 30-minute. Looking at the 30-minute, we have indeed created support, and this 30-minute candle has closed with no wick on the top. And this means that there is a 50-50 chance that the next candle can go up or it can go down. So what do we got to do? We got to wait for the next 30-minute candle to close. That's all what we got to do. Just wait for the next candle to close. That's it. Next candle has closed bearish, which means now the resistance from these wicks comes right over here, creating resistance now. Wow, pound yen has been pretty ranging here this week, except for we've had moves later on in the New York session here, most of the time. And also we've had pretty good moves during the London session as well. Just pre-New York and New York Open has sucked. So we're breaking above this resistance, which is awesome, which is great actually. Now if we can close above this area, all we got to do is wait for some sort of support form, and then we can take a buy for price to move up. We're up 3.6% here for the week so far. This is also a Friday, so we're not going to use our full risk on a Friday. 30-minute candle is closing, and we have successfully closed above this area. What we need now, 15-minute candle has closed with no wick on the top, which means we have to wait a little bit. So we have to wait for price to create some sort of support. It's just waiting. You wait, you find an opportunity, and you execute on that opportunity. The first 15-minute of the 30-minute has closed. We closed bearish, no problem. 30-minute candle is closing back in the range. Is it? Will it? Should it? Just waiting. 30-minute candle has closed bearish. Now, if the next 30-minute candle breaks the high right here, there's a very good opportunity for price to move up in NY open. If this 30-minute candle, so we're going to wait. If it breaks the high, we're going to take an impulse entry for price to potentially move up in NY open. And see this right here? This is going to be a very, very, very good impulse entry for price to move up. So we're going to take a buy. Stop is below this current candle. TP we're looking at, somewhere. It can go all the way up over there, but it's Friday. We're going to be conservative. We're going to put TP right there where we are actually breaking above this high. So yeah, I think it's a pretty solid, good move here. And we can just, 15-minute candle has closed. 15-minute candle closed. Pretty good bullish candle. Now, if this new 15-minute candle breaks its own low, we're going to close 50%. So if we take a look at this right here, this is a, how much risk this is? This is a, what trade is it? 1.3 lot. So 1.3 lot. So this is almost like $100 loss over here. But if it breaks its own low, we're going to close 50%. But if it breaks the high over here, I think we still have a good opportunity for price to move up. So we're going to monitor this in terms of risk management. It's having some trouble. We're still monitoring the time right here. Because if it breaks its own, see that? It broke its own low. So we're going to close 50% right here. Managing risk, close 50%. That's it. Now, if it breaks the previous 15-minute candle's low, this is, see now the candle is coming to an end, which means the 30-minute candle is also coming to an end. So it's just better to just close the whole trade, right? So that's what we're going to do here now. We're just going to close the whole trade because there's no point in letting stop loss hit when the candle is coming to a close and it's probably, now it's coming back in the range over here now. So see now, since it's coming back in the range, this is a fake out because we broke up. We couldn't maintain the move up. So now there's a higher probability for price to continue on pushing down. And we're not going to take this sell because, it's Friday. And Friday we have to conserve capital. So let's take a look at the next candle. Oh, wow, look at that. See? We did continue to push down. This was also not enough range. This was like, 10 pip range here. Nothing to be bothered about, basically. So we did Monday to Friday. This simulation was important because we looked at the higher time frames and then we broke down for confirmations on the 30-minute time frame. In the first example, we also looked at how to add a position back to a trade that you've managed risk on. And I think in this last trade, we also practiced how to manage risk. This was actually recorded. It will be in the database in about maybe 3 or 4 hours. It takes some time to buffer and stuff like that. And I do thank you everyone who joined in for this simulation, this lovely simulation. Every simulation, it's almost like the same thing, the same trade, same concept, same ideas to execute on. What's this? In future webinars, please consider backtesting gold during pre-learning and lunch session. At Sham, we have a lot of simulations like that in the database. But yeah, so next time we're going to do a toss. And if gold comes up, then we're going to do that here as well. So thank you, everyone. Hopefully everyone has a great weekend. And we'll see you guys on Monday. Take care.